Hello, I'm Debbie Bell Hosking for FinextraTV here in our virtual studio, and I'm bringing you part of our Predict 2025 US series, and we're joined by Miles Paschini of FV Bank. Now, we're talking blockchain. I know it's not a new concept, but it's certainly moving things forward in 2025. So, Miles, lovely to have you here in our virtual studio.
Thank you for having me. My pleasure.
So, of course, I said there in the introduction, blockchain isn't a new concept. We all know that. But can you please just define a little bit of blockchain and banking in 2025?
Well, I think just given the last 48 hours, it's an exciting time to be alive in the industry. There's been really swift and I think significant moves by the new administration here in the U.S. creating a crypto czar. So we have a government representative that helps shape regulation. We have a task force that's being set up across multiple federal jurisdictions, and so I think we're finally at that point where we're going to start getting some regulatory clarity, and I think that's very exciting. We have been pushing the envelope, if you will, at FV Bank on integrating blockchain services into traditional banking, but now with clarity coming in from a regulatory point of view, I think that we're really looking where this industry is going to take off.
And how is that actually going to look for the industry in terms of the integration? Can you give us some use cases?
Yeah, certainly. So, in FV Bank 2 years ago, we were the first North American bank to integrate stablecoins into a deposit account. And that was simply our way of looking at the blockchain as a way to move funds from one party to another, and we enabled what's called Circle USDC stablecoin. We've since taken on a significantly more progressive approach. We've integrated USDT, which is another stablecoin, and PYUSD, which is PayPal stablecoin. And we see this as a great way for a bank to have alternatives to traditional payment rails. We have ACH, we have Fedwire, Swift, and local payment methods around the world. Those are all great, but the blockchain offers certain advantages over those systems. And so we've approached it that we want to give our customers more choice, more speed, more efficiency, and how we enable them to make and receive payments. So that's something that's been happening. I think what you're going to see as an ongoing trend is tokenization of assets. In particular, I think you'll see tokenization of yield-based products like money market funds. It's already started to happen with BlackRock launching their BIDL tokenized money market. Franklin Templeton has launched their Benji tokenized money market. And I think you'll see a lot more tokenization of other types of funds and equities. And I think banks will be quite involved in that, and it'll benefit all the stakeholders when that starts really happening.
A little earlier, I asked you when we were offline, are there some fears and misconceptions about blockchain and moving forward? And you split it into two categories for me. Do you mind revisiting that?
Yeah, certainly. So I think on the institutional side, and what I mean by that is the traditional banking industry, as well as corporates, I think they're already starting to warm up to it. They're understanding the benefits. So, as I said before, customers of FE Bank have been able to make blockchain-based transfers for 2 years now. And so they're starting to get used to that. And I think that that trend is going to continue. I think more and more banks will approach integrations like we have. And their commercial customers will get comfortable pretty quickly. They'll realize the benefits and they'll be comfortable adopting. I think on the consumer side, it's going to take a little bit longer. And I think it's really the job of financial institutions to productize blockchain services so that the consumer can approach them easily. We need to remove hurdles that exist. I'll just dive quickly into a simple examples that if you want to use a stablecoin to send a transfer as a, let's say general business, you need to have a cryptocurrency wallet, you need to have an exchange, among other things. The way that we've integrated it at FE Bank, our customer doesn't need to own a wallet, they don't need to manage private keys, they don't need to have an exchange. And so the point is you need to productize these services to make them easy to use. In addition, there's a role in financial institutions to play on the compliance and regulatory side so that we're protecting our customers. At FE Bank, we screen all blockchain-based transactions for money laundering and other like adverse media. And as an individual consumer, it would be hard to do that yourself. But when you have a financial institution who's integrating those controls for you, it makes it not only more approachable, but it makes it safer for the customer to use the product.
And then build more confidence from the customer point of view as
Yeah,
well.
the customer wants to use the newest technology, and it has to represent a benefit for them. If it represents more hurdles, more risk for them, they're not going to use it. So we need to take the best of what blockchain has to offer, and then productize it in a way by packaging up, solutions, providing compliance services in the background so that customers can easily use those products.
And right at the start of our interview, you spoke about changes in the US politically and how things might move forward digitally and with technology. Bearing your comments in mind, what's your biggest prediction, would you say, with blockchain for 2025? And how do you think it's going to move forward in the future?
Well, first of all, I think we'll get much overdue regulation in the U.S., or clarity at least. The current executive order calls for a task force to help draft that legislation. So I think that we will get legislation that will clarify a bank's role, for example, help clarify whether cryptocurrencies are a security or a commodity. And these are just kind of like fundamental clarifications that will help propel the industry. I also think there'll be clarification around banks being able to provide services to the industry. There's been this discussion historically about choke point 2.0 and how certain agencies may have restricted banking access to the industry. So I think we'll get clarity in those areas. I also think that we'll start seeing some tokenization. So like I mentioned before, we've already started to see it happening in money market products. I think you can just generally think about tokenized money, and moving that money over the internet using the blockchain. So I think those types of advancements are going to come really quick. But from a regulatory point of view, just some basic clarifications, right, about things like commodity versus security. I just yesterday, the new administration or Trump rescinded SAB 21. Right, that was a big inhibitor in the U.S. for banks to get involved. It put onerous conditions on them about how they treated digital assets under custody. And so I think those are going to help too, that now you have fundamental accounting changes that are going to allow the industry to take off.
Miles, thank you. There's plenty to think about here in 2025 with blockchain, and also so interesting to hear your point of view as well and your predictions. So thank you so much for joining us here in our virtual studio. Thank you.
Thank you for having me. It was my pleasure.